Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, we have Matt Rowe. He's the Managing Partner and Chief Investment Officer at Headwater Solutions. We're going to take a look at the confluence of volatility events and how that's impacting macro factors. Matt, it's great to have you with us in New York. And this is a perfect day to have this conversation considering the trade talk tariffs that we have going back and forth, and this is certainly impacting the confluence of all these events, particularly when you talk about globalization and reverting away from it.
Yeah. So a big theme that we've seen over the last year and a half has been a combination of the escalation of the trade talks with China and other countries, but most pointedly with China. And also we've seen a big shift in pattern towards institutional selling of volatility. So we really have I guess it's like a very pointed event from our perspective, where there are a lot of geopolitical events that are impacting the market at a high level, and a lot of people with positions that don't really look to perform beautifully in that scenario.
Right, it kind of reminds me, I mean, let's say you were short vol into this weekend, right? Whether it was on the VIX, an index, a single name. This feels like February when everybody was short the vol indexes, and this could be a pretty ugly outcome if that was the case from Friday into today.
Yeah. So the last February event, as you correctly noted, was VIX related. Sort of contained within that product spectrum of a couple of levered VIX products, but this is really a similar situation, just on a broader base. So it's unclear how it's going to shake out. It's likely to take longer and be less explosive than the February VIX event, but the same mechanics are in place for risk management, really, because when you're short volatility, as the market moves down or up, your risk changes in a nonlinear fashion, and that can be tricky.
I mean, I wonder if investors learned anything from February. It wiped out a lot of people, unfortunately, when you say it's a little bit more broad-based this time. Longer term, that's a little concerning.
Yeah. So it'll be derivatives trading 101 in fast motion. So I think people are going to spend a lot of time sorting out the P&L and sorting out the risk profile. Conceptually, owning any risk asset is a short volatility trade, and you can apply that directly to the derivatives and options world. I think there's been a little bit of an overly cavalier attitude towards that application.
All right, let's wrap up here and talk about volatility and correlation, because that kind of fits into this whole scenario.
Yeah, so correlation really, it sounds like a fancy word, and conceptually it's a pretty big strategy and concept, but the way that we view it is that you can look at the relative richness or cheapness of index volatility or single name volatility. So the case currently is that implied correlation is low, which means that index volatility is relatively cheaper than single name. And that's a result of the institutions that we were citing before selling rather heavily. So when we look across the spectrum of vol and correlation, the most obvious one from a cheapness standpoint right now is index volatility. It just isn't really displaying or pricing in the appropriate potential for what we're looking at. And days like today are that realization.
So if you bought cheap, even though I would say the week before last, when things were kind of humming along and the momentum was to the upside, if you're buying cheap protection then, this is the day when that's going to pay off. It's like, you pay the tax, if you will, up until the event. But in a day like today, when you see, the S&P and Dow down significantly.
Yeah, that's absolutely the case. I mean, in a 1 week move, with 10 volatility, you're looking for like a 1.5% move over the course of a week. And we're getting it in, an hour today. So that works out well for us being long volatility.
All right, Matt, thank you so much for joining us at
Thanks
Market
for having us.
And thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.